There's going to be a lot of information coming out over the next couple of weeks. We've got a lot of information out of the US economy, retail sales, CPI, and the jobs report. We've got a lot of Fed governors speaking in the next couple of weeks as well. Look, I generally like buying weakness in US dollar if we see it. We've had a strategy of really waiting for weakness in the US dollar. We've seen that in the last couple of weeks. Going into the last run of data ahead of the March meeting, I'm not sure that we're going to see too much weakness. I think we probably see a bit more strength going into that, depending on that run of data. But I think if we do see it, any dips, 111, 112 dollar yen, I like buying that. I think strength in euro 106, 108, if we see that, I like selling that. And domestically here, while the commodity picture looks very, very positive in the near term for the Australian dollar, I still think 77, 78 should be the upper end of the range. I like selling it up there as well.
Robert, it's Jim Sullivan here. Quick question for you. So dollar's been strong for a while now. I think there are a lot of people on the long side of the dollar trade. We've taken a slightly anti-consensus view. We have a DXY target of 95 on the argument that first quarter data, at least initially, could be weak, and we have a lot of crowded positions in the space. Wondering from your perspective, what would be required from a data point or an event catalyst perspective to drive the dollar significantly higher from where we are now? What are the downside risks to your scenario?
Yeah, look, I don't disagree with you. That's why I've been sort of relatively selective. I like buying US dollar on weakness. I don't really like paying up for it. I do think that we've seen a reasonable amount of position culling. Dollar yen, I think, is a good indicator of that. Crosses like dollar India, I think similarly as well. So I think that long dollar position certainly has been cut back. So look, what propels it sharply higher? Look, I think a run of data that potentially brings pricing for the March meeting from the Fed as close as 50-50. I think will rise over the next week or so. And I think a sense that, let's face it, consensus in the street, and our view is June and deck from a Fed point of view. But what if the market begins to think about the possibility of pricing in as much as 3 hikes through the second half of this year?